Hey there guys, welcome to the Finance Planet, and in today's video I'm going to explain what is margin or leverage trading. So let's get right into the video. Margin or leverage trading is nothing but borrowing funds which you don't have to buy assets in the cryptocurrency, the stock and the Forex market. I'll explain it to you with a cryptocurrency example. Now let's say the price per coin is $1,000 and your account balance is $100. With this $100, you'll only be able to purchase 0.1 quantity of that particular coin. Now let's say you want to buy one full coin and you need to borrow the $900. So where do you get it from? It is provided by your broker or your exchange and is usually represented like this in multiples. So it's very simple. You just multiply whatever leverage you get from your broker by your account balance. Now let's say you got 10x leverage. It just means $100 of your account balance multiplied by 10, which is $1,000. There you go, you have your fund to purchase your asset. But what's the catch? Why do you have to borrow funds to trade? What's the advantage of this and what are the disadvantages? Now let's get into that. Now with an account balance of $100 and using 10x leverage, you were able to purchase your asset for $1,000. Now let's say your investment went up 10% in value. So now you have a profit of $100, which is 100% profit because you just made $100 using $100. That's pretty great, right? But the downside of this is equally devastating. Now let's say your $1,000 investment went down 10% in value. You just made $100 loss, which is a 100% loss. You just lost your trading capital at this point. You're at zero right now. And this is one of the biggest reasons why traders lose money big time, and which is why I personally don't recommend margin or leverage trading unless you know what you're doing, unless you are pretty accurate and you're pretty sure that you can make profit out of it. Then margin or leverage trading is a great tool which you can use it to bump up your profits exponentially in a short period of time. The most important disadvantage in using margin or leverage trading is that you don't own 100% of the asset. When you own 100% of the asset, then you don't have to worry about the price going down, whether it be 20% or 30% or even 50 or 60%. You can just hold it until the price moves back up into profits. That's only if you invested in a good asset. So in this case, you still own 100% of your asset. So only you have the authority to sell it. But in margin trading, your broker or your exchange has control over your asset and they'll cover the losses only until what you have in your account. That is $100 in this example. So once the losses exceed your account balance, the broker is forced to sell the assets. But there's no limit when the price goes in an uptrend. It'll keep going up in floating profits unlimitedly. I'll explain the concept of floating profits and floating loss in another video. So if you want to buy cryptos, then I recommend you use Binance because that's the world's largest crypto exchange. And if you use my link in the description to sign up, you'll get a 10% rebate on your trading fees. You can trade using margin in Binance and you can also buy 100% of the crypto using spot trading. That's the end of the video, guys. If you enjoyed the video, hit the like button. If you have any questions, write it down in the comments. And share and subscribe to The Finance Planet. See you in another video. Take care.